The RRSP deadline is approaching at the end of February, and a lot of people get into a habit of every year contributing to their RRSPs. And that's a fantastic habit to get into, but it does raise the question, are there situations where maybe you shouldn't use an RRSP account? And so in this short video, I'm going to walk through a visual to illustrate how an RRSP is designed to work. And then I'm going to talk through a few situations where maybe you don't want to use an RRSP for your savings. So I'll share my screen with you. And so this is a simple visual. What I'm trying to illustrate here is two things. First is the way that Canada's marginal tax system works. Basically, the way that it works is that at lower income levels, you pay lower taxes than at higher income levels. And there are about 10 different individual brackets in the province of Ontario, where I live and work. The lowest bracket, the top of the first bracket is around $49,000, and the bottom of the top bracket is at around $235,000. And so generally, the more income you make within those amounts, the higher the next dollar of income is going to be taxed. And so the reason that I am talking about this is because when you make an RRSP contribution, it matters a lot what your current marginal tax rate is, or your current tax rate is, when you consider it next to the tax rate that you expect to be in down the road when you take the money out, presumably in retirement. And the way that the RRSP is designed to work, and this is for people that should be considering using an RRSP for their retirement savings, it's when the income that you're currently earning, or the income that you're earning when you're considering making the contribution to the RRSP account, is higher. So the income that you're making here when you're making the contribution is higher than the income that you expect to have, or the income tax bracket that you expect to be in when you eventually retire. And this is a common scenario for a lot of people. This is a common scenario for the people that I work with, that they're earning more income today while they're working professionally than they expect to earn eventually when they retire. And so this is why the RRSP is the most popular retirement account in Canada, because this is most people's reality. They're earning more today while they're working at an income level than they expect to be earning, or their income tax level to be in retirement. So now the question is, when should I not use an RRSP? And the simple answer is when the opposite is true. When your income level today, when you're considering making the RRSP contribution, is lower than, or you have reason to believe that your current income level or income tax bracket is lower than your income level or tax bracket will be when you eventually withdraw the money in retirement. So that's a simple visual to illustrate how the account is designed to work, how the situation where you may not want to make an RRSP. So now we'll elaborate on that scenario. So what are some of the scenarios that could create a situation where maybe you're in a lower income bracket now, or tax bracket now, than you expect to be down the road when you make the withdrawal? The first one is a situation where maybe you're just starting out in your working career and you're earning at a lower level than you expect to be earning in the near future. Or maybe you just took some time off work. You worked only half the year this year, and you know with certainty that your income tax bracket next year or the year following is going to be higher, or significantly higher than it is today. That's the first situation. The second situation is where maybe, and this is really hard to predict for a lot of people, but let's say that you're working professionally now, you're working in your career, you want to set aside money for retirement, but you have reason to believe that you're going to have some significant financial event that's going to occur, that's going to put you in a situation where perpetually through your retirement years that you're going to be in a higher bracket. That might be somebody who owns a business that they expect to sell, and then the sale proceeds of that business may be invested. That might push them into a higher bracket down the road, where at very least it's questionable whether they're going to be in a lower bracket down the road. That's the second scenario, where you have a reason to believe there's going to be some big financial event whereby you're going to take possession of assets that are going to earn income that will push you into a higher bracket down the road. The third scenario is somebody who has already a very, very big RRSP as they approach retirement. So we're talking about 7-figure RRSPs. I don't come across those tremendously often, but when you get into that situation, you may have to think hard about, okay, when eventually I'm forced by the government to start taking money out of this account, is the income that's going to generate combined with my other income sources in retirement going to push me into a higher bracket? So you need to pull out the sharp pencils and try to do a little bit of that number crunching. Again, I don't see that happening very often, but that might be a scenario where you might think, I might be creating a big tax problem for myself down the road by having this gigantic RSP. Nice problem to have, of course, but it's very least a situation where you might want to think again about just automatically making that contribution. And then finally, from a tax standpoint, if you're in a low income situation now and you think that situation will never change, generally you might want to reconsider making RSP contributions. Yes, you could get some tax benefit today, but you may impair your ability to collect certain income tested benefits in retirement that are designed for low income Canadians. And that might be a situation where you might want to consider other savings vehicles. And I'll leave it at that. That's probably a separate video topic. But if you're in a low income situation and you don't think that situation will change, that might be another situation where you may not want to put money into an RSP. So everything I just talked about is really looking at things through an income tax lens. But I'll add a couple other things, which do have to do with income taxes as well. But if you have money that's not designed for retirement, like you want to set aside money to save for the purchase of a car or maybe financing a wedding, right? Like those might be situations where you avoid the RSP because you may not, like if you put the money in, you're going to use RSP contribution room, you'll get a deduction. But if in 2 or 5 years down the road, you turn around and make that withdrawal, it's taxed as income, so you may get no benefit from that tax deferral, plus you lose that RSP room forever. It doesn't regenerate. So that would be a situation where you might want to avoid the RSP. And the final one, this is a bit of a personal one, and this is specific to an individual situation, but generally, if you have high interest debt, like if you're carrying credit card debt and someone would come to me and say, I want to make an RSP contribution, but also they have $10,000 of credit card debt, that might be a situation where I might say, okay, let's take care of that high interest debt before we make contributions to an RSP. Now that's a personal preference, but every situation is going to be different. So certainly make sure that you do some work, ideally with an advisor, to help you think through the situation for yourself. But hopefully this has helped. RSPs, again, very popular, the most popular retirement account in Canada, as far as I know. And the reason why is because most people do earn more while they're working and saving than they will generate an income when eventually they retire. But again, there are situations where it may not work for you. So hopefully this video has helped you think through some of those scenarios. If you like this video, give it a thumbs up, and I will speak with you soon. Take care.